How's it going, guys? Bill here again. Been a little while since I've done one of these videos. Just had some, hadn't really had time between, my door dashing and military going TDY and things like that. But I just wanted to make sure I could get back and put one of these stock videos out today. I got a few stocks that I just wanted to give an update on. They are uh, Trulieve Cannabis, P.A.M. Transport, and Crowdstrike Holdings. Uh, as I'm sure most of you have seen lately, the stock market has not been very kind to us. Even today, I was down. My portfolio was down more than 4% just today. So I've been getting destroyed in the market. But I really do think that this is something that's temporary. And in the long run, I think we're going to look back and be happy with this because we're getting things at a better price. So with CrowdStrike and with Trulieve, they have gone down significantly. But P.A.M. Transport, since I started buying, has gone up. I think I'm up 128% on it. So it's done pretty well for me. So let's go ahead and just take a quick look at these and see how they've been doing lately. The first one I want to look at is P.A.M. Trucking. I just want to take a quick look at this one because they put out just a little bit of news here. And you see here, it says that the CEO has set a $1 billion target for 2025. So this is the first time he has, the CEO has stated this publicly. Now, if you remember, on my previous video on P.A.M. Trucking, I told you guys that that was the goal of the company. And if you'll remember, my brother actually works for the company. He's kind of high up with them, and he let me know, he's been letting me know kind of things like this that the CEO is targeted. So this is the first time they've gone public with this. And I'll put my previous video and a lot of my bullish reasons on this company up in the corner there, so you can click on it, and I encourage you to take a look. So it says, coming off a blowout third quarter in which the company's truckload operating ratio strengthened to a sub 80% mark, CEO Joe Vitorito said in the announcement that P.A.M.'s goal is to grow to $1 billion in total annual revenue by 2025 and consistently operate at a low 80% operating revenue by that same year. So if you think about that, right now the company is still only at a market cap of 790 million. So that's a forward price to sales ratio, if he can accomplish that, of about 0.79. That is, for a company growing like they are and already profitable, that's dirt cheap, because as of right now, they're growing at about 15% year over year. With 9-month revenue of $446.6 million so far in 2021, P.A.M. is on track to come in around $600 million for the year. So you can see that $1 billion is quite a jump from where they're at now. That's nearly double their revenue that they're looking to do. It posted corporate-wide OR of 83.2% in the third quarter, but achieved truckload OR of 77.9%. In the first quarter of this year, company-wide OR was 89.5%. 84% was the number for the second quarter. P.A.M. expects to grow its trucking business at the rate of about 150 trucks per year, Vitorito said. He noted that the statement does not mention acquisitions. We are not afraid of them, he said, but for our focus really is how to do it organically. Any acquisitions would need to be immediately accretive to earnings. So that's all organic growth that he's wanting to do. So any acquisitions that they make on top of that is just more growth than what he's even projecting right now. So to me, that's a huge thing. In its truckload business, P.A.M.'s exposure to the auto industry traditionally has been 70% of the total customer base. And that right there is why they had such a hard time during COVID, because all the auto manufacturers shut down. So there was really not much for P.A.M. to haul after that. But as you see, Vitorito said the company's plan is to still be in the auto business and not move away from it. its share of the truckload business is now 30 to 40%, he said. So you see that they have pretty much learned their lesson to not be so undiversified and to be more diversified now. So that's going to help them out in the long run, obviously. That 60% to 70% untethered from the auto industry has been a healthier goal for the company. And P.A.M got there because what really changed is our ability to execute when there are challenges on the auto side, like the one that faced the company last year when the auto industry largely shut down at the start of the pandemic. Now that the company's business is meaningfully diverse, P.A.M is not necessarily at the mercy of the auto industry, which he described as a group of customers that is really good at purchasing. P.A.M's earlier heavy dependence on demand from the automotive industry put the company in a tough position where you don't have a leg to really negotiate off. Wall Street so far is applauding the moves P.A.M is making. The stock performance of the company might be described as astounding, especially for a company whose CEO just took over in August 2020. Admittedly, it is a company with historically auto sector focus, which a year ago was coming out of closures of auto plants due to the pandemic. For that kind of business, 2021 is going to look a lot better than 2020. Not only is P.A.M stock up about 185% from a year ago, it's up 215% since its low just before Christmas last year. In the past month, the stock is up 25% and it's up 110% in the past 3 months. Even after that kind of run, the price to earnings ratio is a relatively subdued 13 plus, and its price to book ratio is also just over 4, a restrained number. So it's still relatively cheap and it's still growing. So that's to me why it's still quite a buy. One thing that has helped, P.A.M is authorized to buy back its stock in part because of those low valuations. Our strategy has been that we felt like our stock was undervalued and we needed to get buy-in. So when a company is buying back their stocks, that usually tells you that it's quite undervalued. So that's really it on the update for P.A.M. I just still believe that it's a strong stock to hold on to. It's not going to be, something that is too volatile for you, and it's just going to continue to grow for you. So that's one that I think should really be looked into hard, that nobody ever talks about. It's in the trucking industry, and that industry is hot. Next, we're going to take a look at Trulieve, and this is just a quick update on this one. As you can see, it's been in steady decline pretty much all year, but it's not because of fundamentals. It doesn't really make sense. And, just taking a look, you can just, on Yahoo Finance here, just take a look down and see that they're consistently just growing and growing. I mean, look at all these dispensaries that they've been opening lately. There's one that was just opened yesterday right there. A new one in Tampa Bay just 8 days ago. Let's see here. There's one in, 16 days ago. There's a new dispensary there 16 days ago. They started some new edibles there in Florida. They started those just 17 days ago. So they've been extremely busy. And we'll take a look here at their third quarter results real quick, because it was their 15th consecutive profitable quarter. So, and they did really well with it. So we see here that their net revenue increased 64% year over year to $224.1 million. That is extreme growth right there. They had a gross profit of $153.9 million, gross margin of 68.7% compared to $102 million and 75% in the third quarter of 2022. Of 2020. Their net income of $18.6 million, impacted by $16.4 million of one-time compensation and transaction costs, primarily associated with the Harvest acquisition. So that's the recent acquisition they made, and that's going to spread them out into different states. They had an adjusted EBITDA of $98 million, or 43.7% of revenue. Trulieve and Harvest combined third quarter revenue of approximately $316 million, net loss of approximately $9.8 million, and adjusted EBITDA of approximately $121 million. So the net loss there is because of Harvest. Trulieve was profitable, but that's most of the net loss was before Trulieve actually finalized their deal with Harvest. So, and their goal is to change their business to what Trulieve's is, and they'll become profitable also. They had a positive cash flow from operations of $75.1 million for the 9 months ended September 30, 2021. They had cash of $213.6 million as of September 30, 2021. They opened 7 new dispensaries, increasing retail footprint to 101 retail locations. So they opened 7 new dispensaries, increasing retail footprint to 101 retail locations nationwide. And as I just showed you, they've opened even more dispensaries since then. This took place before the ones I just showed you. They began first cultivation operations in the state of West Virginia, so there's some expansion. Closed the acquisition of the equity of Keystone Shops in Pennsylvania, so stretching to Pennsylvania, because previously, until fairly recently, they'd only been in Florida. Completed the acquisition of a dispensary license and commenced wholesale operations in Massachusetts. Received a notice of intent to award a Class 1 production license in Georgia. Launched product portfolio, cultivar collection, Momenta, Muse, and Sweet Talk. And launched sale of hydrocarbon extraction concentrates with first available products in the state of Florida. So they had a very busy third quarter, to say the least. See here in the recent events that they completed the acquisition of Harvest. That was on October 1st. And then in addition, they were able to retire $271 million of high cost and short-term Harvest debt, including debt due upon change in control. And then they also were able to retire $18 million in Trulieve notes payable. So they paid off quite a bit of debt here in that third quarter. They opened first medical dispensaries in West Virginia with new retail locations in Morgantown and Weston. And they converted 14 former Harvest dispensaries to Trulieve branded retail locations and opened 3 Trulieve locations in Florida. And they currently operate 155 retail dispensaries and 3.5 million square feet of cultivation and processing capacity in the United States. And then here you can just look at some of these financial highlights from it. And that's really all I'm going to go over with Trulieve. I just wanted to show that the fundamentals are still there. This price drop is, it's just doing you a favor. When the price is dropping, but the fundamentals are going up, that's doing every buyer a favor. So I'm still buying Trulieve. And I just think in the long run, it's just going to make me tons of money. That's my plan with it. So I plan to hold this for years and years. Lastly, I want to take a look at Crowdstrike. Their fall, recently makes even less sense to me than the Trulieve fall, because they absolutely killed earnings. They reported third quarter earnings and revenue that topped estimates amid strong customer growth. So Crowdstrike earnings were 17 cents a share on an adjusted basis for the quarter ending October 31st. Revenue jumped 63% from a year early to $380.1 million, including acquisitions, the company said. Analysts had projected Crowdstrike would earn only 10 cents a share on revenue of just $363.6 million. A year earlier, the cybersecurity firm earned 8 cents a share on a revenue of $232.5 million. So that is absolutely huge growth. Annual recurring revenue increased 67% to $1.51 billion from a year earlier, topping estimates of $1.476 billion. Crowdstrike is successfully evolving from an endpoint security provider to a security platform vendor. We see multiple growth opportunities that can drive long-term upside. Crowdstrike said it added 1,607 net new subscription customers in the quarter for a total of 14,687 subscription customers as of October 31, representing 75% growth year over year. For the current quarter ending in January, Crowdstrike forecasts revenue of $409 million at the midpoint of its outlook. Analysts had projected $400 million. So anyway, that's just a really quick look at CrowdStrike. It's one that I am very big on, and I just think it has a huge future ahead of it. Cybersecurity is going nowhere. It is becoming more and more necessary by the day. And you've seen over this past year how many companies have been held hostage over hackers and had to pay millions of dollars just to get their own information back. So a product like CrowdStrike is just, it's a must-have for any company, I believe. So there's my take on those three, and my feelings on them are pretty strong. I still think long term that they have a long ways to go, and I think they're going to make us a lot of money. I really do. So do me a favor, if you found any value in this, please just give me a like, hit that thumbs up for me. Go ahead and subscribe, ring that notification bell, and leave a comment. Tell me what your thoughts are on those stocks. If you bought them, if you thought about buying them, or what's your reason maybe that you didn't, or something along those lines. So anyway, y'all take care, and I will see you next time.